Hello and welcome back. My name is Josh and this is Finance Soup. And today I want to discuss how interest rates impact different investment vehicles. And today I'll be discussing how they impact housing or house prices, real estate as an investment class. So real estate is an investment class. You can invest in real estate. Obviously the price of real estate goes up and down. Part of that's based on the income that you can bring in from real estate. You're either renting it out to a tenant, maybe you own a commercial property and you're renting out to a commercial tenant, like a mall, for example. So part of it is definitely based on that. But another major impact of housing prices is interest rate. And I want to show why that is. So let's say you're buying a property, and let's say you didn't have to put any money down. You have a 30-year loan and a 10% interest rate. Again, this is not today, but at one time interest rates were in the 10%. You can see here your monthly payment would be $877.57. Uh, you know, let's say suddenly something happens and interest rates fall from 10% to 2%. You can still afford $877 per month, but not a dollar more. So you could say how much house or how much of a real estate thing can I buy for the same money per month? So if interest rates drop to 2, you can get about 236, I believe it is, maybe 237, and we're up to 876. So still a little lower, but basically about that. So you can get 2.4-ish times more, afford 2.4 times more real estate, the cost of it, when interest rates drop from 10 to 2. So as you can see, when interest rates go down, housing prices go up. And as we all know, in the last year and a half during COVID, housing prices across Canada and the US, probably also around the world, I know for a fact Canada and the US, housing prices have gone up a lot. And one of the main reasons for that is because interest rates were so low. I know I personally bought a house during the last year and a half, and it was much more affordable because of the low interest rates. I previously had an interest on my last property at close to 4%, and now I'm paying about 1.5%. And I was able to afford significantly more house for basically the same cost. Um, However, again, like it goes the opposite way. Right now you bought a house and you pay 2%, and suddenly interest rate goes up to 4%. People might not be willing to pay the same price for that house. Oops, I missed a zero there. Maybe they'll only be able to pay 180-ish. Again, there's more than just interest rates that impact home prices. There's supply, there's demand, there's what are people willing to pay in rent. There's lots of factors, but interest rates are a major factor in home prices. And if we look at interest rates over the last 30 years, interest rates, historical, we can see a pretty clear trend from here was the 80s, where it was, at some point in the 20s. There's a pretty clear trend line. Obviously, there's ups and downs, but it's continuously going down. We hit a peak, it went from 20s to, 10s to 9s to 6.5, 7 to 5.5 to 2 to, now we're at 0. I don't think you can see that 0 one, but there you go. So interest rates have been trending down for the last 40 years, which has pushed prices of homes up as well as stocks. I'll do another video on how it impacts stock prices and stocks versus bonds, but hopefully this helped explain how interest rates can impact real estate investments. My name's Josh, and thanks for listening.